Hello, students, and hello, everyone. This is Teacher Angel, and welcome back to our Accounting Online video lessons. For today, our lesson is about the financial liabilities, and in the later part, there will be discussion on the debt restructuring. So, the lessons under this chapter are as follows. So, we have the basics of financial liabilities. Then it will be followed by the accounting for bonds. Then accounting for compound financial instrument. Then we also have the notes payable, the loans payable, and finally the debt restructuring. So we will go first to the basics of financial liabilities. So based on our lessons in intermediate accounting, there was a certain chapter there that talks about the financial assets and financial liabilities. So particularly that's on the financial instruments. So we know what are the financial liabilities, and the counterpart on the other side niya, if you have assets here, that would be liabilities on the other side or in the other party. So we have the financial liability is any liability that has contractual obligation. So on our part or on our end, we must either deliver cash or another financial asset to another entity, or we can exchange financial assets or financial liabilities with another entity under conditions that are potentially unfavorable to the entity. So sa other side, ano niya, the other side would be the one receiving the cash. So mo na siya financial asset, or makadawat siya og other financial asset, or pwede sad siyang maka-receive og financial asset or financial liabilities under favorable conditions. So that is on the side nga maka-receive sa financial asset or mag-record sa financial asset. And also, we have to remember that there should be a contract that will or may be settled in the entity's own equity instruments and is non-derivative, for which the entity is or may be obliged to deliver a variable number of the entity's own equity instruments, or it could be a derivative that will or may be settled other than by the exchange of fixed amount of cash or another financial asset for a fixed number of the entity's own instruments. And so all other liabilities that did not meet the definition or not meet the characteristics that are mentioned earlier will be classified as non-financial liabilities. Now let's go to the major classifications of financial liabilities. So the financial liabilities are classified into two. So we have the financial liabilities at FVTPL, or at fair value through profit or loss, and we have financial liabilities at amortized cost. So if you can recall, in the topic on financial assets, the financial assets are classified into three. We have financial assets at fair value through profit or loss, just like the financial liabilities, and it also has the financial assets at amortized costs. But the financial assets have a third classification, which is the combination of the characteristics of the FAFVPL and the FAAC, which is the third one, the financial assets at fair value through OCI. So when we talk about the financial liability, so we have these only two major classifications. And the financial liabilities at FVPL or FVTPL are further classified as held for trading and designated.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching!